Hello, this is Bob Joyner, and I'm recording this on Thursday, July the 18th, 2024. And in this video, we're going to be talking about multi-dimensional or multi-time frame charting when we're coming to day trade the SPY. So today was just a great example of several ways in which that works. So let's go ahead and talk about that. Looking at the screen here in front of us, what you're looking at here is a 26-minute chart on the far left using Heiken-Ashi candles, a 5-minute chart in the middle panel using Heiken-Ashi candles, and on the right panel are my 1-minute traditional candlesticks, but they have color coded, so there's 6 different gradations of red and 6 different gradations of green on that chart. So what I want to talk about is just the fact of how when you're trading in multi-time frame charts that you can see a lot of things that you don't always see in other things. And so I may produce several recordings trying to talk about multi-time frame charting and how important that is for seeing opportunities in the market. So today, like I said, presented multiple opportunities. Let's go ahead and cover those. So this morning inside Buy Talk chat room, I posted at 10:18 this morning. I said 559.51 is the 1-hour pivot line. Now I'm not showing the pivot line on that chart. I got that from a different chart that I use. If you look right up in here, 559.51 is what I said was the 1-hour pivot line, and you can see that was almost exactly, we hit 559.52 actually in the morning high this morning, and then after that we just rejected that and we continued to fall all day, as you can see in this 26-minute chart, and we fell from like 559 to 50 all the way down to 551.50 and actually briefly touched 550.50. That's a 9-point drop in the SPY from that high point to that exact low point. But when you point out lines of support and resistance from various time frames, it makes you aware. It makes you more aware of what other people are trading, because not everybody's looking at this chart that I'm looking at, right? They're looking at different time frames. But a lot of people are looking at pivot lines on various time frames. Came up to that line, and knowing that line makes you a little bit more cautious perhaps. You would not want to be going long right ahead of that line, even despite the fact that the market was a little bit bullish at the open this morning. But we hit that line, rejected it, and came back down. Now the opportunity that I want to talk about later, what happened later, there were multiple opportunities all day long. It's a heavy day of trading, but I want to point out this line. So on the 26-minute chart, one of the things I talk about is the 26-minute Heiken-Ashi fractal line. That is the lowest low open and the lowest low close for the body of that Heiken-Ashi candle over here on the 26-minute chart. So I draw a red line there because there's about an 80% probability that that line is going to be resistant. And the reason is because we're in an obvious bearish trend. You can see the 26-minute Chiku coming up to debate the historical price curve is unable to do it as this trade unfolds, and it comes slashing back down below the historical price curve, right? In this little counter trend bull move that we had between 12:30 and 1 o'clock, the market moved up. To me, I see us going up here to this red line. I know that that's a possible area of resistance. It's not a guarantee. It's about an 80% probability trade though. And I mentioned I had the line drawn on the charts, also had the blue line drawn on the charts, and at 1:35 what I posted to the group at 1:35 I posted, watch out for 5-minute Chiku, which is this orange line right here, to break down below the historical price curve, and for price to break below the 554.20 area, which is just below that blue line. And the reason I said that is real simple, is I know that if Chiku were to break below that after we hit that area of overhead resistance, I knew that if Chiku crosses back down and we have a 5-minute breakdown in the Heiken-Ashi candles as well, it would both together mean that this is probably the end of that bull run and we're ready to move back down and go back into trend. So to me, this 12:30 to 1 o'clock was simply a counter trend move. It was a bullish move. You could have made money on the upside on that. But what you're watching for is you're watching for price to come back into trend. And since we had such a bearish trend, that's what I was watching for. So I gave the alert. Like I said, 135. 135 price was right here. But finally, you see, we moved back below the 5-minute half line. Okay, 5-minute Chiku, the orange line here, crosses back down below the historical price curve. And at that point, you can see also on the far right panel, which is a 1-minute chart, price falls back below the J Kumo, which is this purple area, back below the 27 EMA. We have red candles all the way through this move. We have a slight green candle here as we come up and test that area, but that's simply another opportunity to get into the trade. And as you look at the 5-minute chart as it continues lower, but that moved down from 554.20, which is the line I mentioned, all the way back down in here. A nice 3-point move in the SPY if you caught it, and there was no reason to exit. Again, if you use the 5-minute Heiken-Ashi candles, you just have a reason to keep going down and down. I'm going to draw another circle here. In this blue circle we have CCA, which is one of the indicators I've created to track momentum. We have this big move up, and what I want you to see is the divergence between this indicator CCA right through here. Big move up, looks like it's really going to go somewhere, but price has hardly moved up at all. And we come up into these volatility stops that I've got pegged at my own settings, and there's two different volatility stops there. But we come right up into that first volatility stop. We've got the J Kumo overhead for possible resistance. CCB down here is very bearish at that point. So that timestamp is what, 208. We go over here and see how that shows up on the 1-minute chart over here. So again, a video about time frame charting and the benefits of that, and why it's so important and even wise to look at multiple time frames when you're day trading the SPY, because things kind of move, they kind of ebb and flow. It's sometimes your best move may be the 5-1 charts, sometimes it may be the 26-minute 5-minute charts, but you're going to see opportunities throughout the day as these waves of price movement come in and out, and you can identify counter trend trades, and you can know possible areas of support and resistance so that you can make good trading decisions. I hope that video is helpful and maybe shed some light as you try to trade the SPY on your own. If you want more information about SPY Talk, I'll have something available pretty soon. And again, thanks for watching. Please give a like. Any comments you appreciate to share, feel free to do so. Thanks for watching.